All right, gang. So we can see gold heading all the way back up here. Right now gold is at 1915. 1915 right here. Take profit 11, and we can see gold heading all the way back up to 19 above 1965. Take profit 14. This is take profit 14 area, and we can see a push above that. We're going to 2000. Overall, gold can still get back up here. This is like the a yearly high. The highest point gold has been at was at 2,775, and then price shot all the way back down after that. But gold can still go all the way up here again. We can still see gold heading all the way up to 2,000. And gold is looking good this year. It's looking like it wants to go all the way up to 2,000. I just wanted to show y'all that. And we're gonna go right back into the news, and talk about that. We'll actually start it over so we can hear it one more time. And they'll talk about this. But I wanted just to show you that gold is could potentially, overall still an uptrend. It's at 1915 right now. 2000 is like not that far. As we seen last week, gold got to 1974. Right here, like 1974, gold can get all the way up to 2000. It's not, it's not that far from reach. Basically, you know, and with this war and everything and what's going on with commodities and gold and the banks and everything, they can definitely push gold all the way up to 2000. So let's just go back over that. I just wanted to show you that gold has got all the way up to here already. This was last year, just 2 years ago, and right now it seems like it's getting back up there. That price went to 1974, and that's not that far from 2000. Not that far from 2000. So it can definitely get back up here. It hasn't been up here since August of 2020, and we can see gold going to 2000. So let's just go back. I just wanted to show you gold has got all the way up here. The 274 is the highest that gold been at. So we can see that happening again as we just go back, and we're just going to go over. We're going to go back to the news right now and watch the rest of this. As they explain this. So, price did go to take profit 14, 1974. So we can get a push above, take profit 12, 1930. We're heading back up to 1945, 1965, take profit 14, and then, eventually 2000. We can get back up here again. We can get all the way back up here. And I'll let you know if what gold's doing. But overall, it looks good. It looks like, you see this uptrend right here. Gold can definitely go back up to definitely back up to 2000. And now we're heading up to 2000s. Let's go back to the news, gang. So, gang, let's just start this over again.
Kevin, you're noticing an interesting divergence between gold on the one hand going higher, and I was just looking at it's actually, I believe, now higher on the year, and the NASDAQ 100 or tech, big tech going lower.
Yeah, what's pretty fascinating is that we've seen gold really outperform here in this post-earnings season where people are looking for safe havens, especially in an inflationary environment. And what gold is telling you is that what a lot of people are talking about is that
Kevin, you're noticing an interesting divergence between gold on the one hand going higher, and I was just looking at it's actually, I believe, now higher on the year, and the NASDAQ 100 or tech, big tech going lower.
Yeah, what's pretty fascinating is that we've seen gold really outperform here in this post-earnings season where people are looking for safe havens, especially in an inflationary environment. And what gold is telling you is that what a lot of people are talking about is that inflation is because of the supply chain, right? And the Fed really can't fix that. And so when you look at the options market today, you're seeing about 3 times the amount of calls versus puts. But what's interesting is that there's a lot of conviction in a risk reversal trade where someone came out and sold a bunch of March 168 puts to help finance further upside in gold out in May to the tune of the 188 strike price. So it's pretty telling that gold has been sort of a dead trade for about a year and a half now, and now it's finally breaking out even against its own technicals. So it's looking like it's set to shine for the rest of the year.
Yeah, I'll be curious about that breakout because right now, if you look at a longer term chart of gold, it looks as though though it could potentially be a false initial breakout, but that trade you're talking about sounds very high conviction. But you know what's interesting, Kevin? Everybody's been talking over the last 3, 6, 12 months about digital gold or Bitcoin being this big hedge against inflation, but not today. It's down. Is that because of the risk-off sentiment?
Yeah, it's tough when having digital assets, comparing them as a store of value or inflation hedge, given the fact that they benefited from the Federal Reserve and the easy monetary policy, and they haven't really been time tested. And I think that is coming into play now. If you look at the way gold's performed, it's really hard to be a store of value when it can drop 50% from November when inflation really started picking up. So that's pretty telling right now, because if you're going to want a safe haven asset, you're not going to go into one that's really levered to technology.
Yeah, good point. And speaking of technology, it's interesting because today with yields down, that should be a positive tailwind for technology. But because it's a haven bid on the geopolitical tensions, we see tech down. Do you see this dynamic continuing where we could see a rally in bonds and a sell-off in tech?
Yeah, and you just have to hit home on some of the tech earnings that really performed. NVIDIA actually had a pretty good earnings announcement, and you look at their growth and you look at their guidance, and what is NVIDIA really tied to as well, and that's cryptocurrency. And so it could be the sentiment from that. And so when you're looking at investing, we haven't seen that capitulation event, especially in technology, that you can see standard deviations blow out on VIX, right? We're still hovering just below 1 standard deviation. We would need a couple more moves higher in the VIX to around 38, 36, 38. That'd be 2 standard deviations, and then you can really feel, market sentiment get bearish and lend to a bottom. But we just haven't gotten there yet. So it's been short little spikes here, but nothing like we've seen over the past several years, like Volmageddon that we experienced in 2019 in February.
Yeah, and it certainly looks as though the VIX could be setting up for another big spike as it continues to round higher. And then very quickly, Kevin, something that doesn't quite fit today's picture. Healthcare, defensive sector, is also down. In fact, it's down many of the days over the last 11 days. And I understand you're seeing a lot of put buying there?
Yeah, and so what was pretty telling is that healthcare actually saw 17 times the amount of puts versus call, and there's a lot of bearish sentiment going into healthcare, which, sometimes you've seen investors retreat in there, but over, like you said, the last 11 days, it seems like there's going to be a lot more pain in healthcare. It really hasn't played out, and so more volatility to come in the healthcare space according to the options market. 17 times, we haven't seen that in a very, very long time for healthcare.
So yeah, gang, gold is still rising higher and higher, gang. And we'll keep you updated with that, gang. I'll keep you updated with what it's doing. And we'll talk more about this. All right, gang.
And my car is dented.
Geico does offer 24/7.
Really quickly moving situation, but I do want to get your initial thought on this. Bank of Russia, again, their key rate is moving to 20%, had been at 9.5%. They're saying that this is necessary to make deposits attractive. What's your initial thought on that?
It's an extraordinary move.
Yeah.
I think it shows you just the significance of this event. That's a bigger hike than we saw in December 2014, which is one of the more recent analogs we can look back to. It's really an extraordinary action by the central bank.
Well, also there's this question of reserves at the central bank. What's accessible for them? What's not accessible for them after this weekend? What's the current read on that?
I think those are still unknowns and very important unknowns. We also don't know what kind of workarounds they have, potentially to work with other countries to establish swap lines. I think the broader question is not just whether the central bank could run out of reserves in a situation like that. It's what's the confidence in the broader financial sector. I think that could be a bigger issue for them at this point. And as we see this 20%, this hike to 20% is obviously an attempt to restore confidence.
Right. So you mentioned some of the levers that they have, this hike to 20% being one of them. What are those? Is it mainly just looking to other countries to help with their FX reserves?
Well, there's been a huge demand for cash. Obviously, we saw queues at ATMs over the weekend. The ruble is
this is the reason why gold,
plunging in offshore markets.
all we got
So I think when we look at their options at this point, some form of capital controls. We've already seen restrictions on foreigners selling Russian assets. So we could see more of that. So it doesn't necessarily mean this continues as a run on the banks, because there could be capital controls that would step in.
When you look at contagion risks, How are those likely to evolve? If you can look into your crystal ball, what are the wider implications from Russia emanating to the larger global economy?